Hi everyone, Danny Green here with RE/MAX First MV Real Estate Group, and this is your Calgary real estate market update for the month of January. So, thanks to persistently strong sales, total inventory levels in Calgary eased to 2,620 units, the lowest level seen since 2006. This has caused the months of supply to remain exceptionally low for this time of year at 1.3 months of inventory. What this means is that if there were no more listings, it would take 1.3 months for all of the properties listed to sell. Now, in these tight market conditions, this is contributing to further upward pressure on prices. So the benchmark price in January reached $472,300, a monthly gain of nearly 2% across the board and a year-over-year gain of 12%. Of course, some areas in Calgary saw even higher price increases from last year. As far as lending rates go, they are contributing as well, and with the persistent strong demand in the housing market, purchasers are eager to get ahead of any increases before they go up. This is coming straight from CREB and our chief economist, Anne-Marie Laurie. We did see more listings this month, but it did little to change the market balance or take any pressure off of prices. This was expected, as these conditions should persist for several more months. Now, there were 2,009 sales in January, and this is well below record levels, but 98% higher than long-term trends. At the same time, 2,476 new listings came onto the market, resulting in a sales to listings ratio of 81%. This is far higher levels than traditionally recorded in January. So pretty much everything that is being listed is selling. Now let's look at the detached market. So detached new listings improved in January, reaching 1,295 units. However, with 1,148 sales in the month, inventory levels continue to fall. Limited supplies are likely preventing stronger sales growth for this property type. And detached inventory levels fell to a new record low at 895 units for the second month in a row, with months of supply remaining below 1 month. The exceptionally tight conditions caused prices to rise in January, and the unadjusted benchmark price rose by $12,000 compared with December, a monthly gain of over 2% and a year-over-year gain of 14%. While the gains compared with January 2021 are significant, much of last year's price growth did not occur until the spring. Looking at semi-detached, January saw a boost in new listings compared to the low levels seen at the end of 2021. This helped support further gains in sales. Despite the increase in new listings, inventory levels remained relatively low, with only 242 units in inventory. Levels are 46% below the long-term trends. Now, low inventories and strong sales resulted in a months of supply of just over 1 month, far lower than both last year and longer-term averages. The tight market conditions caused prices to trend up compared with last month, resulting in a January benchmark price of around $440,000. Prices trended up in every district, but the monthly gains were not as high in the Northwest and City Center as they were in the rest of the city. Looking at row townhouses, January sales rose to 305 units, more than double the levels traditionally seen at this time of year. The improvement in sales was related to the level of new listings this month. Now, new listings are still lower than traditional levels, but they did rise from figures seen over the last few months of 2021. Inventories eased slightly compared to last month, but with only 422 units in inventory, supply levels remain well below long-term trends. As a result, the market continues to favor the seller. Persistently tight market conditions caused prices to increase for row-style properties. However, the pace of growth was not as high as what we've seen in the detached segment of the market. January's benchmark price reached $305,600, nearly 2% higher than last month and 9% higher than last year. Okay, let's look at the apartment condominium market. With 357 sales in January, levels were the highest they have been for the month since 2007. Now, this was an improvement in sales, and it was supported by the number of new listings that came into the market. In January, there were 551 new listings added to the market, with just over 1,000 units in inventory. There's more supply available in the apartment condominium sector than in any other sector. Despite the improvement in the sales, the months of supply has remained at 3 months, reflecting a relatively balanced condition. Now, with fewer supply challenges in this market, prices have remained relatively unchanged compared to last month. The unadjusted benchmark price of $251,200 in this area is over 2% higher than it was last year. Now, that's your real estate market report for Calgary, January 2022.